Hi, my name is Aik Aliferas. I'm Senior Managing Director for Institutional Property Advisors, a division of Marcus Millichap Canada. Marcus Millichap is a brokerage firm with 90 offices across the North American markets, and we run the investment teams here in Canada. There's been a lot of movement in the market over the past 24 or 36 months. Since COVID, we've all been navigating a new normal. And there's, been no secret to that in the real estate world. Everybody's really still trying to navigate where we're going and where things are going over the next 12, 24, 36 months. I think the monitoring of interest rates has been a big factor. The inability to really feel that the rates are consistent so that modeling and analysis can sort of run through when you're looking at doing any type of investment. So that really creates a bit of a dynamic that's interesting. I think most of the investors on the multifamily side have really seen some retraction in rents, lowering NOIs, so they've not been used to that. Past 15 years has been consistent, strong growth. So it's sort of stabilized. I mean, it hasn't really pulled back that much. So overall, the fundamentals are still extremely strong. But it's still a little bit of a difference in what the market's been used to. So we've seen a real influx on the multifamily side specifically of the private investors really stepping up right across Canada and here in Quebec especially. We've seen increased activity by the private investors, family offices, etc. We've seen the REITs pulling back a little bit on the acquisition side simply because financial markets aren't giving the accretive requirements for REITs to be acquiring right now. So they've been pulling back and sort of stepped back a little bit, allowing for the private investor to really get active. Similarly, in the commercial side, we've seen the same sort of activity. Again, private money and private capital seems to be very aggressive and is moving into opportunistic buys right across the country and here in Quebec as well. Just like I said earlier, the interest rates are really a factor that everybody takes into large consideration. It really transcends itself through financing, allowing for the leverage, and that's a big factor for private investors who I said earlier are really the most active buyers right now. So the private investors are extremely sensitive to rates, so that is only mitigated by pricing. So the pricing is reflective of the right type of returns. Then the investors move forward on the transactions, but that has really put downward pressure on pricing across the board in all asset classes. Right now, rents have pulled back. Landlords, operators, property management companies across the country have started to be very creative in creating more incentives for the tenants, more amenities for the tenants, more programs for the tenants to attract tenants to their buildings. These type of things are what are working, the management companies are working very diligently at. And we really didn't have to do that in the space for quite a few years. Things were, chugging along quite well for many, many years without a lot of effort from the on-site side. So what we're seeing now is these amenities, these services are becoming more and more important. The new builds, of course, are providing enormous amounts of amenities, and that's coming into the market and creating competition. So we've seen free rent cycles that we've not seen before. We've seen incentive bonuses that we've not seen before. So a lot of these things have been incorporated into the management programs of operators right across the country in order to sustain rent levels at the highest they can. So the housing shortage problem and narrative has been around now for quite a few years. Our government did a great job cutting back on immigration, eliminating foreign student policies. So both these have really pulled back on the requirement for housing right across Canada and specifically in Quebec. Here in Montreal, to drill right down to the Montreal market, downtown Montreal has been affected dramatically by the reduced student population. So to say that there's a housing shortage, which we've been saying for years, is still probably accurate, but that has been mitigated dramatically with the latest government policies that have been implemented. So I think there's a bit of a fallacy now that the shortage is as big as it was. It's really come down quite a bit. And now we're seeing a bit of supply and oversupply in certain areas. So we're seeing rents drop because of that. We're seeing, obviously, construction has really dropped off on the condo side right across Canada, from Vancouver to Halifax. And Montreal's no different to that. And I think we're going to continue to see a real slowdown on the condominium side for quite a while, until we see rates sort of come back down and we see population growth again. I think we've seen this year, we're expecting a population reduction, which is the first time we've seen these kind of numbers in years. So I think these are the new normal, as I put it, and I think we're going to see that continue over the next short while.